Good afternoon. On behalf of the directors and employees of First Business, I am pleased to welcome all of you to our 23rd annual meeting of shareholders. 23rd, wow. My name is Jerry Smith, and I'm chairman of the board of First Business Financial Services, and I will act as chairman of today's shareholder meeting. I now call today's shareholder meeting to order. Barbara Connolly, our general counsel and corporate secretary, will act as secretary of the meeting. Jim, would you hand me that water, please? Sorry. Thank you. Before we proceed with our agenda, I would like to briefly discuss today's meeting procedures. In order to provide for an efficient and orderly meeting, we have asked shareholders desiring to vote their shares at today's meeting to submit their proxy or ballot to our Inspector of Elections, Charlie Zaid, of Computershare Investor Services, as they entered the meeting. If you are a shareholder who has not yet voted, please see Charlie at the registration table outside of the auditorium. I will also provide a final reminder to vote after the discussion of the matters to be considered at today's meeting and before the polls close for voting. To further provide for an efficient and orderly meeting, we will be allocating time for a shareholder question and answer period after the business portion of our meeting. Before we begin the meeting, I would like to draw your attention to the forward-looking statement disclosure on the screen and remind you that certain matters discussed at this meeting and during our financial and operational overview will be forward-looking statements intended to qualify for the safe harbors from liability established by the Private Securities Litigation Reform Act of 1995. Forward-looking statements as described on this slide and as detailed in our Form 10-K for the year ended December 31, 2012, are subject to certain risks and uncertainties that may materially adversely affect our anticipated results, so we urge you to carefully consider these factors in evaluating any of our forward-looking statements. Copies of our Form 10-K are available on the SEC's website, which is www.sec.gov, through a link provided at www.firstbusiness.com/proxy materials and at the registration table outside of this room. It is now my pleasure to introduce our holding company directors who are here with us this afternoon. Would each of you please stand as I introduce you? Mark Buer, Director of the University Research Park in Madison. Jan Eddy, founder and former CEO of Winger Technologies and retired business development executive of Quest Software. Jan is chair of our Corporate Governance and Nominating Committee. John Harris, retired professional in the investment banking industry, most recently managing director of the investment banking financial institutions group of Stifel Nicolaus. Jerry Kilcoyne, managing partner of Pinnacle Enterprises. John Silseth, president of Van Tietom, LLC, and First Business Bank, Milwaukee board chair. Barbara Stevens, retired senior vice president in human resources with Bucyrus International. Barb is chair of our compensation committee. Dean Vakes, retired CEO of Chorus Communications Group. Dean is chair of our audit committee. And Corey Chambas, CEO of First Business Financial Services. Thank you. I would like to take a bit of time to honor Chuck Thompson, our former chairman of the board, who passed away in October of this past year. First, I'll tell you briefly a little bit about Chuck's background. Chuck was an amazing individual. His accomplishments, quite frankly, are incredible, what he all managed to do in his life. I'm embarrassed to see what my bio would look like next to Chuck Thompson's, realistically. Chuck was born in Chippewa Falls and grew up in Eau Claire. Went to what at that time was Eau Claire State Teachers College, which is now the University of Wisconsin, Eau Claire. Chuck and Diane, his wife, who he met in Eau Claire, and then moved to Wisconsin Dells. And Chuck, with his degree in secondary education, started to work in the school system in Wisconsin Dells. Chuck, being the achiever that he was, not long after became principal in Wisconsin Dells, and if I'm not mistaken, in fact, was Jan Eddy's principal at Wisconsin Dells at one time. Chuck and Diane branched out over time, bought a restaurant called Edwards Pancake House, which today is still in business as Mr. Pancake. They had a number of other businesses over time. The amount of things that Chuck and Diane have been involved in the Wisconsin Dells and nationally and in the state of Wisconsin, as I said earlier, are really just phenomenal. But they continue to have been involved with the partners in Carousel Inns and Suites in the Dells, Wintergreen Resort and Conference Center. Chuck was involved in AAA Board of Directors, Marshfield Clinic, Riverwood Condominiums, which they are owners, Ducks Unlimited, etc., etc. Chuck also served as the director of the chairman of many of Tommy Thompson's campaigns, his good friend Tommy Thompson for Congress, Tommy Thompson for governor, and etc. Chuck also served as director of the commissioner of the Public Service Commission from 1986 through 1992. Chuck then also served as the Secretary of Transportation, the longest-serving Secretary of Transportation in Wisconsin. He served from January of 1992 until April of 2000. Chuck joined our board in April of 1992. I met Chuck Thompson through John Kluss, who was a founder and organizer with Jan and myself and others when we started the company in 1990. I met Chuck shortly after that when Chuck was an investor in our company. And Chuck joined our board in April of 1992, became chairman in April of 2001, and Chuck served as the chairman until he retired in July of 2006. Chuck also served as the founding director in Milwaukee at First Business Bank Milwaukee from June of 2000 to 2006. Chuck was really just a big, big supporter and friend of First Business. From the day that I met Chuck, he was just very enthusiastic about our company and what we were doing. He was very supportive of us. Chuck was a very good listener. When you're the CEO of a young growing company, it's very beneficial to have somebody like Chuck, and I would meet with Chuck many times in Baraboo and Portage and Wisconsin Dells and wherever else, and bring Chuck up to date and have the opportunity to talk through some things with Chuck. Don and I had the privilege of going to Finland with Chuck and Diane as ambassadors for the state of Wisconsin in an entrepreneurial program where Chuck came up with the idea while we were there that they should bring some students from Finland over to Wisconsin Dells to help work. Now they have had perhaps thousands of students that have come through the Wisconsin Dells from countries all over the world since that time. Chuck was just, as I said, he was just a huge, huge supporter for myself personally. He was a big asset of our company. He not only talked the talk, but he walked the walk. He did a lot of business with us in addition to being an investor. He did business with our entities, and we were just very, very proud to have Chuck Thompson as a friend of First Business Financial Services and of First Business Bank. Chuck Thompson, in addition to his many, many accomplishments, he was a very good man, and I appreciate having the opportunity to have him as a friend. So if you would, we have some of the many of the Thompson family members here tonight so that we can honor both Chuck as well as the Thompson family. So if you would all stand, please, I would like to introduce you Chuck's wife, Diane, Julie Johnson, Liz Knoop, Tom Knoop, Charlie Knoop, Bob Johnson, and Chuck's longtime friend, Bill Hutchins, otherwise known as Hutch. So if you join me in a round of applause. Thank you very much.
I just wanted to take a second to thank you, Jerry, for what I think Chuck would find to be a fitting tribute. He'd certainly probably be a little embarrassed by accolades because that was the kind of guy that he was. On behalf of the family, I'd truly like to thank you for inviting us down here today. I know that Chuck truly enjoyed working with First Business Bank along with all the other endeavors he was involved in. Thank you very much.
So as you know, we're having a reception afterwards, so I hope you'll have an opportunity to visit with the family afterwards as well. Thank you very much for coming tonight. Now, at this time, I would like to introduce representatives from KPMG, our independent registered public accounting firm, who are here this afternoon. Diana Coons is a partner on the First Business account. Jude Fernandez is a senior manager, and Lana Friedman is a senior associate. Will you all please stand? Thank you very much. They will be happy to answer any appropriate shareholder questions during the adjournment of the business portion of our meeting. Now, Barbara, will you please review the matters related to the organization of the meeting?
Good afternoon. Notice of the company's annual shareholder meeting was mailed on or about March 28, 2013, to all shareholders of record as of the record date, March 20th, 2013. The polls have been open for voting on the matters listed in the notice since March 28th, 2013, and will close for voting on any item when discussion has been completed on them. Since no shareholder nominations or proposals were filed in advance of the meeting, as provided in the bylaws, the business of the meeting is limited to the matters listed in the notice in accordance with the provisions of the bylaws. The notice of the meeting and the affidavit of mailing of the notice will be inserted in the company's minute book. There are in excess of 3.3 million shares represented at this meeting, which constitutes approximately 85% of the outstanding shares entitled to vote here today.
Thank you, Barbara. Since the majority of the voting shares are represented here today, either in person or by proxy, a quorum is present. As a result, we may commence with the legal portion of our annual meeting. We have 4 proposals on the agenda for shareholder action. The first proposal is for the election of 3 directors for terms to expire at our 2016 annual meeting of shareholders. The nominees are Jan A. Eddy, John M. Silseth, and Dean W. Viggs. The second proposal is to approve in a non-binding advisory vote the compensation of the company's named executive officers as described in the proxy statement mailed with the notice of meeting, which is referred to as a say-on-pay proposal. The third proposal is to recommend, in a non-binding advisory vote, the frequency from which shareholders will vote on future say-on-pay proposals. The fourth proposal is for the ratification of the selection of KPMG as the independent registered public accounting firm for First Business Financial Services for the year ending December 31, 2013. Since these matters are already before the shareholders at this meeting, no formal motions are required to further introduce them. We shall now proceed to take the vote on these matters. Are there any questions on the voting procedure? Is there any discussion with respect to any of these matters? Seeing none, will those shareholders who have not turned in their proxies or ballots please do so at this time? As a reminder, if you have already submitted a completed proxy card or ballot, you need not vote again at this time unless you wish to change your vote. I believe that everyone desiring to vote here today has done so, and I therefore declare the polls closed. I believe that the votes have been tallied, and Charlie has provided Barbara with a copy of the Certificate of Inspector of Election. Barbara, will you please report on the results of the shareholder voting?
Mr. Chairman, the tabulation provided by the Inspector of Elections indicates that each nominee has been elected by a significant majority of the shareholder votes cast at the meeting. The say-on-pay proposal was approved by a majority of the votes cast at the meeting. And the every year option with respect to the frequency with which shareholders will vote on future say-on-pay proposals received the plurality of the votes cast at the meeting. The selection of KPMG has also been ratified by a majority of the votes cast at the meeting.
Thank you. As indicated by your vote, I hereby declare that Jan Eddy, John Silseth, and Dean Vakes have been duly elected as directors of our board to serve until our 2016 annual meeting of shareholders and until their respective successors are duly qualified and elected. I further declare that the say-on-pay proposal has been approved and recognize that it is the recommendation of the shareholders that future say-on-pay proposals be presented every year. Lastly, the selection of KPMG as the company's independent registered public accounting firm for the year ending December 31, 2013 has been ratified. If there is no further business to come before the legal portion of this meeting, I would entertain a motion for adjournment, and we will move on to a few presentations by our management team. So moved. Thank you, Ralph. Thank you, Sandy. All those in favor say aye. Aye. Opposed? Thank you. The legal portion of this meeting is adjourned. As I mentioned before, we will now move on to a few presentations by our management team and then open the floor for shareholder questions. To start the business portion of our meeting, I would now like to introduce our Chief Financial Officer, Jim Rapella, who will report on our 2012 financial results. Jim?
Thank you, Jerry. Good afternoon, everyone. It's my pleasure to be here today to review our 2012 financial results. First Business Financial Services ended the year 2012 with total assets of just over $1.2 billion. This is an increase of $49 million from the end of 2011. Fueling the growth in assets was a $60 million increase in loan and lease portfolio and a $30 million increase in our investment securities portfolio, partially offset by a decline of $45 million in cash and cash equivalents as we deployed liquid assets to improve the earnings and margin. The investment securities increase of $30 million to $201 million at year-end 2012 is an increase of approximately 18%. A primary objective of our investment portfolio is to provide a source of liquidity while contributing to the earnings of the company. The overall credit risk associated with the investment portfolio is minimal, as we primarily own securities which are guaranteed by the Government National Mortgage Association, commonly known as Ginnie Mae. These securities are backed by the full faith and credit of the United States government. In addition to these securities, we have purchased a limited amount of municipal securities, and as part of the pre-purchase analysis, we require that the issuers have unlimited taxing authority, and each municipality is reviewed for overall creditworthiness. Total net loans and leases increased by $60 million to $897 million at year-end 2012. This increase of approximately 7% follows a few years of relatively slow or no growth. In addition, it is important to remember, as our clients continue to make their loan and lease payments, the result is $5 to $10 million of principal reductions each and every month. On top of these normal loan and lease payments, we have continued to successfully reduce our non-performing loans and leases by nearly $8 million from year-end 2011. Even though we grew our loan and lease portfolio to a record level, the challenge over the prior few years continues to exist. As we have noted in the past, growth has been hard to come by. This is due in large part to the ongoing shortage of qualified loan and lease prospects interested in borrowing money to fund or expand their businesses. As has been our message for what seems like a very long time, the economic environment has limited the number of qualified opportunities for us to evaluate for new activity. We have previously stated and continue to believe that our underwriting requirements for extending credit will not be compromised purely for the sake of growth. Following that same line of thought, the economic environment we have been in for some time now requires us to ensure that we retain liquid assets on our balance sheet to ensure that we can be poised to meet the needs of new and existing clients, both borrowers and depositors. The investment securities portfolio makes up the majority of our permanent on-balance sheet liquidity. Additionally, as of the end of 2012, we carried $86 million of cash and cash equivalents, including our deposit at the Federal Reserve Bank of Chicago. As of the end of 2012, we believe our level of on-balance sheet liquidity was more than adequate to meet our short-term liquidity needs, and we plan to utilize excess liquidity to fund loan and lease growth, pay down maturing wholesale funding, including brokered certificates of deposit, and invest in additional high-quality investment securities while maintaining adequate liquidity at an improved margin. There has also been a change in the level and mix of our liabilities. Total deposits increased $41 million to $1.09 billion at year-end 2012. More importantly, our in-market deposits grew $113 million, or 19%, from the end of the year 2011 to $718 million as of year-end 2012. Year-end stockholders' equity equaled $99.5 million. This is an increase of approximately $35 million from 2011. This increase is primarily the result of the equity offering in December, which net an increase in equity of over $27 million, combined with the company's comprehensive net income, partially offset by cash dividends declared in 2012. In addition to equity, our regulatory capital includes subordinated debt and trust preferred securities. Both of these debt instruments qualify as regulatory capital and therefore allow us to better leverage stockholders' equity to provide an enhanced return on equity and earnings per share. The company continues to exceed required capital levels, and both of the subsidiary banks are well capitalized as defined by the bank regulators. This next slide is our summary income statement. Reported net income after tax for First Business was $8.9 million for the year ended 2012. This is an increase of $500,000 from 2011. Our primary source of income is net interest income. This is the interest earned on our loan and lease portfolio, plus the interest earned on our investment portfolio, less the interest paid on deposits and borrowed funds. Net interest income for 2012 totaled nearly $38 million. This is an increase of $2.4 million from 2011. This increase is primarily related to an increase in net interest margin, which improved to 3.36% from 3.29% in 2011. This margin improvement is the result of the decrease in the cost of interest-bearing liabilities, partially offset by a decline in the yield on earning assets. Also contributing to the increase in net interest revenue is the 4.5% increase in average earning assets. Similar to all other financial institutions, we maintain a reserve for loan and lease losses. The expense to maintain this reserve in 2012 was $4.2 million as compared to $4.3 million in 2011. The largest influence on the size of the provision for loan and lease losses during 2012 was partial or full charge-offs of loans that were not specifically reserved for in prior periods. Net charge-offs during 2012 were approximately $3 million compared to $6.4 million in 2011. Non-interest income, primarily consisting of revenue earned for providing trust services, deposit services, and loan fees totaled $8.7 million, which is an increase of $1.6 million from 2011. The single largest item within non-interest income is revenue earned from trust and investment services, totaling approximately $2.9 million, an increase of about $400,000 from 2011. The primary component of this revenue source is derived from trust assets under management. Changes in market values combined with net new assets under management that came from new and existing client relationships increased our total assets under management to over $613 million, an increase of nearly $81 million from the end of 2011. The revenue improvements and a relatively stable provision for loan and lease losses were partially offset by the change in non-interest expenses. Operating expenses increased $2.3 million. Compensation expense was up $2.1 million as we strategically added new business development officers during the past year. Partially offsetting this increase were decreases in FDIC insurance expense and collateral liquidation costs. Income tax expense was $4.8 million in 2012 compared to $3.4 million in 2011. This increase can be primarily attributed to the increase in pre-tax earnings in 2012 as compared to 2011. Additionally, 2011 tax expense did benefit from a few one-time discrete items, the largest being the release of the valuation allowance associated with prior net operating losses. Excluding the effect of these items in 2011, the tax rates were in line with prior years. That concludes my prepared remarks for the calendar year 2012. Thanks for your attention. And at this time, Chief Executive Officer Corey Chambas will provide an overview of the company's 2012 achievements, first quarter 2013 financial performance, and the objectives for 2013.
Thanks, Jim. Good afternoon. Welcome, everybody. Thanks for coming today. What I'd like to do today is share a little bit of an overview about the company, talk a little bit about our performance for 2012 relative to the objectives that we laid out last year at the shareholders meeting, cover our stock performance, and then talk about our 2013 goals. I'd like to start with our mission statement, and I just want to emphasize here that we understand that a key part of our mission is to build long-term shareholder value, so we want to make sure that you know that we know that. Our corporate profile, we're headquartered here in Madison, as I'm sure you know. We're focused on business and high net worth. Therefore, we do not need full-service branches to execute our strategy, and we also have a lot less employees than a bank our size typically would. We're about $1.2 billion in assets at the end of the first quarter. We're only one of two Wisconsin-based commercial bank holding companies listed on NASDAQ or the New York Stock Exchange. We have an experienced leadership team, an entrepreneurial management style, and we've grown 100% organically. It's important to us from a culture standpoint and also because it protects our credit standards. Consequently, we've grown through unit and de novo expansions. Our business lines, we started with First Business Bank in Madison in 1990, added our asset-based lending company, First Business Capital Corp. In 1995, got into the equipment leasing and finance business in 1998 with First Business Equipment Finance. In 2000, expanded to First Business Bank in Milwaukee. 2001, we added First Business Trust and Investments. 2006, expanded to First Business Bank in the Northeast. And in 2012, we added First Business Factors. This is a receivables financing business line that we've been looking to get into for some time. Our footprint looks kind of expansive now, but really the bulk of the employees are the three green dots in the Wisconsin footprint of the three Wisconsin banking locations. The blue dots are asset-based business development offices, so those are one-person offices. The yellow are equipment finance offices, and the orange would represent the factoring business that we established in Chicago. So how are we doing? To answer that question, I'd like to run through our 2012 objectives. This is exactly the slide that I showed you 1 year ago. This is what we said we would work on and try to do. Continue organic revenue growth, achieve improvement in our core earnings, increase our percentage of in-market deposits, continue with asset quality improvement, maintain strong profitability, ROA, and invest in talent for future growth and profitability. We really felt a year ago there was an opportunity because of disruption in the marketplace to add talent, which would pay off in the future. And so that was a specific objective. And it also ties to the previous one, which was to maintain strong profitability, not really enhance. We knew we were making an investment in that talent in 2012. So on each of these items, I'm going to show you how we did. look at the last couple years and then also look at first quarter of 2013. Hopefully you saw those results. We had a record bottom line net income for the first quarter, so we're pleased with those results. On top line revenue, we've grown about 10% over the last 3 years, similar in 2012, a little bit better at about 13% growth in first quarter to first quarter in 2013. Core earnings have expanded even more so, about 18% over the last 3 years, about 12% last year, and up a robust almost 21% first quarter of this year. Core earnings is our top line revenue less expenses, exclusive of unique items and specifically exclusive of credit costs. So this is the core operating piece of our earnings that we measure and have continued to monitor. Our in-market deposits grew quite significantly in 2011 and 12. You can see over $100 million in each of those years. You can see that leveled off a bit. We had nice compound annual growth rate for the last couple of years, but you can see it leveled off, and the measure I showed you at the beginning was in-market deposit percentage, and this slide shows that percentage. So in 2012, we were just under 50% of in-market deposits. That's now about 2/3 of our deposits. And I want to pause and talk about this for a moment because people say, wow, that's great. You're really driving that up. Is that going to get to 100%? And the answer is no. We're about where we want to go with this measure. And the reason is we have always strategically used brokered deposits as part of our funding strategy, specifically to match fund fixed rate loans. So when you look at our balance sheet and the amount of fixed rate loans over a year, we're about evenly matched with this brokered amount. So if we drove that in-market deposit percentage up higher, those are shorter term funds, principally money market accounts, a significant amount. So those are floating rate, and you'd be matching those with fixed rate loans and be taking interest rate risk. And we don't want to take interest rate risk. So we're about where we want to be on this measure. It won't be moving far from here, and we'll circle back to that when we talk about the 2013 objectives. But we're very pleased with where we've gotten to in this measure at about 2/3. Non-performing assets have improved significantly. You can see that asset trend is down meaningfully through last year and then again in the first quarter of this year at about 1% non-performing assets to total assets. And really, non-performing assets are an issue, but the real problem is if they turn into charge-offs, because that's where it really impacts shareholders. And so what we did here is went back to the end of 2007 and then looked at the cycle that we just went through. So starting with those balances, we looked at the cumulative charge-offs, because this is the real cost of problem credit are your charge-offs. So you can see our charge-offs were 2.88% over the credit cycle that we had. That compares favorably to the Wisconsin-based bank holding companies at almost 8% and is only about a quarter of the banking industry. The whole industry was almost 12% charge-offs over that economic cycle. So we're very pleased with these results. Talked about maintaining strong profitability and ROA, and you can see we were very level from 2011 to 12. We have ticked up meaningfully here in the first quarter and eclipsed the benchmark, which the banking industry often looks to, of 1% return on assets. So that's a goal that we've had set out for ourselves in the future and have finally achieved that and are very pleased with that. The other thing we said we would do was expand and make investments for the future, and we did that with a Kansas City office of First Business Equipment Finance last April, and we did a lift out of about 5 people who had more than 20 years of experience of working together as a team. So this was a team that came together and was an expansion of the equipment finance business line that we were already in. In addition, we got in the factoring business. First Business Factors was established at the end of 2012. We brought in 3 folks with about 50 years of combined experience in the industry. And this is a complementary business and a logical extension to our asset-based lending business that we're in. In addition to the 3 business development officers that are embedded in those 2 businesses, we hired an additional 7 business development officers in our existing platform, in our existing business lines. So a significant expansion, 10 business development officers. That's very significant. We started the year with about 33. So almost a third, again, investment in BDOs. It takes a little while for those folks to pay off, but we believe this is a prudent investment for the future growth of the company. Next, I'd like to talk a little bit about our stock performance. Besides the strong operating performance metrics that we just went through, we think some of the things that we've been doing on the investor relations front have helped in our stock position. Those include the CEO report, which hopefully you've had mailed out to you. We're sending this out to our shareholders, to clients, and to prospective shareholders on a quarterly basis, and we started this at the end of 2011. In addition, we garnered research from two firms in 2012, Raymond James and Fig Partners, and we're very pleased with that research coverage. And then in January of 2013, KBW picked up coverage on us and initiated research coverage. So we're very pleased about that and think that that's been impactful as well. And finally, we raised $29 million last December in an equity offering, and this not only strengthened our capital position, but it also allowed us to improve our institutional shareholder following, and that's been a goal of ours for quite some time that you've heard me talk about at these meetings in the past, and we now have about 40% institutional ownership. In addition, all of that has improved our trading activity. Right now, our 90-day average trading volume is more than double what it was a year ago. So what did that do to the stock price? For the year of 2012, we were up just under 40%. The blue line is the S&L industry. The whole industry was up a little over 30%. And our peer group size bank, $1 billion to $5 billion in assets, just over 20%. And then bringing that up to date through Friday, I don't know exactly what happened today, but through Friday, we were up about 80%. The industry up about 55%. And the peer group up about 35% from the beginning of last year. So very good results in that regard. Besides stock appreciation, shareholders care about dividends, and as I'm sure you noticed, we doubled our dividend earlier this year, and I had a lot of good feedback about that. Another aspect to that is the payout ratio of a dividend and the sustainability, and when you annualize our first quarter results, you can see that our payout ratio was less than 20% of our earnings for the quarter. Consequently, we retained a significant amount to reinvest in the company and to help fund our future growth. Tangible book value grew about 9% over the last couple years and now stands at $26.07 at the end of the first quarter. So now I'd like to talk a little bit about 2013. What are we working on for this year? Mostly more of the same. Continue organic revenue growth and improvement in core earnings. But one thing I mentioned was on the in-market deposits, that was changing a little bit. We'll still need to grow our in-market deposits. As our assets grow, we'll need to grow those. But we're not trying to change the mix meaningfully of in-market and brokered so that we can continue to match fund our balance sheet appropriately and not take interest rate risk. But we do want to change that mix of in-market deposits and move it as much as possible to operating accounts of the businesses that we work with and DDA accounts, checking accounts, as opposed to money market accounts. That improves our cost of funds, which helps our margins, which grows our revenues, and also allows us to generate fee income through treasury management services. So that's a little bit of a tweak on that one. We'll continue to work on asset quality, maintain strong profitability, and opportunistically invest in talent. So that significant growth that you saw last year of 10 new business development officers is unlikely for this year. We'll continue to strive to do that. If the right opportunity comes along, we'll take advantage of it, but we would look to grow at a more measured pace in that regard in 2013. As a result of our offering, we were invited to ring the closing bell at NASDAQ and took advantage of that opportunity, which was quite special. And I'd like to close my part of tonight's presentation with a short video on that closing ceremony.
Thank you, everyone. Well, good afternoon. It's truly my great pleasure to welcome First Business Financial Services and Chairman of the Board, Jerry Smith. Now, there's a lot to celebrate today. Let me first congratulate First Business Financial on its recent successful offering of 1.2 million shares of common stock, resulting in gross proceeds of about $29 million. Now, the success of this offering is certainly due to the financial performance of First Business Financial. The company has had positive earnings each calendar year throughout the recent economic environment, and asset quality was consistently better than peers when financial metrics continued to improve. For the most recent quarterly results, First Business Financial reported record net income of $2.6 million, and top-line revenue increased 12% to a record $12.2 million. And the Street has certainly noticed because when we look, with the exception of today, the stock is up 40%. It's not a bad return. Well, Jerry, and to the team, I think that all deserves a big round of applause and congratulations. First Business Financial is certainly well positioned for long-term success because of the strong relationships they foster with the clients that they serve. In fact, First Business was recently named to the ABA Banking Journal's top 25 mid-sized public banks, ranking 15th out of 253 public banking institutions. And it was the only bank to receive the accolade in the states of Illinois, Minnesota, and Wisconsin. Jerry, congratulations on all of First Business Financial's past success. We look forward to watching the company continue to grow with that true entrepreneurial spirit as a NASDAQ-listed company. And now it is my pleasure. Please join me in welcoming Chairman of the Board, Jerry Smith. Jerry, come on up.
Thank you. Wow. NASDAQ, Times Square, New York City. Who would have thought? We appreciate NASDAQ inviting us today for the closing bell. This is a very, very exciting day for us, and I'm honored to be asked to speak today. In preparing for this, I am reminded of what Vince Lombardi told his players when he became head coach of the Green Bay Packers. When you get into the end zone, act like you've been there before. I will try to do that. We do want to thank our staff that I know is watching today, our board of directors, both past and present, who have both challenged and supported us over the years. Our shareholders, particularly those 167 people who had the faith in us and our idea and wrote out their checks back in 1990. Special appreciation and congratulations to Corey Chambas, our CEO, and Jim Rapella, our CFO. This has been a very challenging adventure that I've had the privilege of sharing with Corey and Jim. The culture of our company is critical to us. We wrote our Statement of Principles and Beliefs in 1992 with the intent of identifying those characteristics that define our culture. We still believe and practice these fundamentals. They are a key to why we have such a great team at First Business Financial Services. Our original business plan was to focus on a niche of providing financial services for businesses. That remains today. While the definition and array of those services have changed in 23 years, we are very focused and true to our mission. While many other business banks have diluted their mission through consumer retail banking. Our roots are entrepreneurial. In addition to pursuing new opportunities for our company, this lends itself to understanding our clients. We truly are client-focused. We know all of our clients. There are no long lines or 800 numbers. We help our clients through ongoing business seminars and industry expos. Our clients' success parallels our success. Our clients employ many, many thousands of employees. We understand our role in their business, and we take that seriously. We are well positioned with the expertise, resources, and efficiencies of much larger competitors, but retain the nimbleness and accessibility of smaller community banks. We went public and listed on NASDAQ in 2005 with two primary goals. One, to provide liquidity and efficiency for our shareholders. Two, to have access to capital. We patiently waited for our IPO until we determined the market conditions were right. We continued our strong growth, and interim capital was provided through private sources. Now, having completed our IPO, we are in an even stronger position for the future as we begin the next chapter. I am sure it will be exciting and rewarding. Now I would like to have Corey, our board of directors, and all the First Business family present to join me at the podium to ring the bell to close the NASDAQ market and fully enjoy this moment and opportunity.